There we are, back again. But this is basically what is going on in terms of indices at the moment. And we have similar sort of charts here and similar VPA lessons on the indices. These are the three. I've got the YM, which is the Dow. I've got the NQ, which is NASDAQ, and I've got the ES, which is S&P 500. They were very negative this morning, and the markets were generally reacting to last night and overnight news, as always, and pandemic and everything else all wrapped into one. So this morning it was pretty negative, but what's actually happened, you can see maybe this wick here, we've had this recovery. We've got quite a big recovery going on. The NQ was certainly the most negative, but it's actually recovered pretty much back to par. We've also got the same going on over here on the ES. Now, in terms of what's going on the VIX, just pull this across, pop that up full size. This is what's going on the VIX. It's actually falling. It's falling intraday, which means that in terms of equities, what we should be seeing is a rally in equities, which is certainly the case. That said, the VIX is still trading around 25, well, it's 25.4 at the moment. It's still trading around this level, which we've been banging on about for a few weeks now. If this market were really going to rally big time, you would expect the VIX to have come well off that number by now. It's not. It's holding around that region, doesn't show any signs of falling anytime soon. But what we're seeing in terms of the rally here is just very similar actually to what we saw on the oil chart. So it really just does, it gives you another view, if you will, in a different market. And there's also another really nice VPA lesson here as well, which is just building, or it's just been triggered. So what we saw here, this is 14:30, so this is 2:30 our time. This is getting underway with the cash markets. So all this volume is on Globex. Then we move into the cash markets and we get the big injection of volume. It's what we expect to see, which is fine. Market starts to sell off quite hard, rising volume, that's fine. We get some more in here, and then what do we get? Pretty much the highest volume of the day, not quite, but then we get buying. We've got a wick to the lower body, and the market starts to rally. We've got a repeat, market starts to rally. Market sells off a little bit, indecision, we get another buying signal, more buying under here, and off we go, up to the upside. Again, reversal, what happened? Same as on the oil chart, falling volume. What it's telling you, that is not a primary reversal, it's just a secondary into a reversal higher. So we've seen basically a primary into a primary. Okay, so this is just a secondary against the primary, which is now bullish. We've already turned bullish. We're reversing higher, reversing lower into it, falling volume, no problem. More buying comes in here. The buyers step in again. We're not having that. Off we go. Bang, nice candle there. Nice candle there. Maybe a little bit too much volume on that one. Possibly I would have expected to be about here somewhere, because that spread of that candle is not hugely different to this one, although it is wider. And in addition to that, also we've driven through this low volume, so I'd expect it to be a little bit lower than that, but there we go. Nothing's perfect in this world. We get a little bit of weakness, on up we go, and then we're back up to the volume point of control. Trend monitors transitions, fine, that's all looking good. We're then back to the same scenario we had in oil. We've got a little bit of price support below. That's been tested 4 times, and we've got resistance exactly the same 4 times above. So we've got a little channel. Highest volume is on the volume point of control, which is always the case. Then we get the breakaway, high volume, market participation, no problem at all. Then what do we hit? We got another level up here. This is a much more serious level. Very thick level of price-based resistance. We've also gone into this wedge of volume up here, which is also acting as resistance. So we've got resistance price-based, we've got resistance volume-based, we've got a volatility trigger, we've got ultra-high volume. So we know the big operators are in here. We've got a little bit of selling in there. But what we're waiting for is either congestion or reversal. And what we're getting at the moment is congestion, loud and clear. We're still in bullish momentum, which is fine. If you were going to jump out of that, if you had some profit in there, you're going to jump out and wait, that's fine. That's what I suggest. If you get one of these and you're on the right side, bang, up you go. Nice quick profit. If you've got an open position, just bag it and tag it, get out the market. Or if you have, if you're scaling out and you've gone in with multiple positions, in other words, then just take however many off the table. If you've gone in with 5, take 3 or 4 off the table. If you've gone in with 3, take 2, so on and so forth. Just leave a position in the market to benefit you should this continue higher, but bank the most of your profit. If you've only got one position, very simple decision, just take the whole lot off the market and out of the market and wait, bank it, because you don't want to sit through congestion and you certainly don't want to have a reversal. So either way, it's a win-win. If the market carries on and breaks through this region, looks pretty good. We'll get through here, we get out through the top of this particular price candle here at 240. So if we get up through there, then you can look to jump back in again. You've lost very little, you've lost a bit of few points in here, but then would you rather sleep easy, or would you rather stress about sitting in a position that's going to maybe sit there for minutes, maybe even hours, who knows? So it's almost a replica of the oil lesson, the VPA lesson on oil, and you've got almost exactly the same here on the NQ. What was different about the NQ, and this was also a classic example of divergence, which we see pretty much every day now. At the start of the session, basically what happened was the YM and the ES took off and went and fell. The NQ decided to go up the other way, and it took off this way. So at the open, this was in complete contrast to what the other two indices were doing. And if you see that, basically, this market is fighting two markets. In other words, it's 1 against 2. Now, there's no guarantee that the two are going to win, but generally the weight will normally prevail. So it's another example of using the charts to give you information about what is likely to happen. The likelihood was that this was going to roll and join them in the downward move. It was desperately trying to move higher, but in addition to that, we had a volatility trigger. So at the very least, you're expecting congestion, if not a full-blown reversal. It didn't reverse that strongly, but nevertheless, this doesn't look a lot, but I can assure you, when you're trading this as an index future, these are big bucks in here. A little bit choppy. Then you start to see the buying coming in, similar sort of pattern, breaking away from the volume point of control, up into what was price resistance, acts as support now, up through here. Low volume node up through this lot here, absolutely fine, should move through there fairly easily. Big injection of volume up in here. No volatility on that one, interestingly, and that's another reason for using the related markets in this way, of which obviously this is, it's related in the sense that it's an equity market on a different index, it's a different construction, but essentially it's the same risk profile, if you will. This gives you a heads up if you're trading, perhaps you're trading NQ without looking at the other two. If you're looking at the other two and they've gone with a volatility trigger, then it tells you why this has paused. Yes, you've got a bit of selling in here, but it's a much stronger reason if you've got a volatility trigger on the other two, which is just confirming what is going on in the NQ. Other than that, it's a similar picture. And exactly the same on the ES. This is what I meant at the open. This is what we saw with the ES. It absolutely plunged off the cliff at the open. We had the usual nonsense at the start, the volatility, blah, blah, blah. We always get that. Down we go. Then we get the buying coming in, more buying coming in, more support here. Up we go, into support, up and on. Now we've got the big wide candle, lots of volume. We've broken through. What's interesting about this one is slightly different. We had resistance here, which is now acting as support, and it's come into play there. This was acting as resistance. It's now coming as support. We've gone through there, blasted through that one. And the volume is actually pretty light up here. So in terms of the volume moving this market higher, it's not going to take so much effort because we're into a low volume node here. I'm just keeping an eye on the VIX. The VIX is still falling. We're down at 25.3 now, so we've fallen another point. Trend monitor's on there. Just pull that over. You can see. Just pull it across. There we go. These are the 4 time frames. This is 1, this is 3, this is 5, and this is 20. So you can see pretty much what's going on. We've got the volatility trigger on here, reversed down out of that. This is the trend monitor on all 4. And that's giving us the signal that the VIX is falling, and therefore, if the VIX is falling, we expect equity markets to rise. I'm just going to pass back to Anna at that point, if I may.